Good afternoon, everyone. In today's video, I'm going to do another update on our index levels. If you haven't already seen the first video in which we actually build together these levels, I'd recommend watching that. I'll leave a link to the videos in this series. There's been the first video where we built out the levels, along with another update video, along with the trend following strategy idea, looking to again play the same levels idea. Now in today's video, with today's price action rather, and the close that we have, we're now hitting our previous support areas. This is where price action bounced from. This was on Jan 24th, the same move down in this quote-unquote bearish market, and I think tomorrow is going to be a very defining moment in terms of what happens. Do we hold this area of support, see buyers come in, and have at least a shorter term bounce, or do we instead continue to break down lower, breaking past our next level, which is 419.80, and that's inside of the S&P 500. In terms of technicals here, that squeeze that we were looking at on the daily time frame in the S&P has officially fired short. So now that it's fired, and it fired with a fairly large momentum break here, you can see that with the histogram bar, I'm more in the mindset that we would see a bit of pause here and have a temporary period of upward movement before continuing that descent back down lower and hitting that next level, which would be 391.23. However, I would be proven wrong here, and I think price action would beat our Q if tomorrow we just continue breaking past this 419.80, break past that previous support, which that low was 420.76. Our close as of today's candle was 421.95, so we're pretty much there for all intents and purposes. So now it's a question of what happens, and price gives us that clue tomorrow, at least I think would happen. Now, if I switch over to something like our Dow, you'll find a similar idea. So again, retesting previous support. We see that across the board here in the index markets. The next levels again in play for the Dow. If we do break those levels, 326.82, which is the 1272, and next up after that 317.19, which is based off of a Fibonacci retracement move. Now after that, we have the Qs, which to me look a bit weaker. The Qs have broken that Fibonacci level that we had, 336.17. We've also broken past previous support here. The squeeze is yet to fire inside of the Nasdaq, so again, expecting a bit more bearish activity. Nasdaq definitely looks a bit weaker to me compared to the other index markets. And on that same note of the Nasdaq, if we switch over to something like Microsoft, which we've also been observing, Microsoft has also broken past those levels near that 291 mark, with a squeeze still building up that has yet to fire. So across the board here, I think we have very interesting levels that are in play that tomorrow, or at least the rest of this week, are going to be very key in helping us decide which direction do we break. Do we see buyers come in, at least to these previous support levels, and pick price action up back higher, just even for a little bit before sellers resume control? Or do we have sellers really full on controlling the reins of this price action journey, if you will, where we're going to just continue breaking down lower and they have full control, at least as of this moment? Finally, the last market we have for our indexes, the Russell. And inside of the Russell here, the Russell has a bearish slingshot squeeze. Our next level is 190.56. Outside of that, we would have really that 100% retracement mark. So if we load that in as well, if I click on that one, we have 170.56, which would be the level that we would be looking at outside of 190.56, especially if the squeeze starts to lose momentum here, goes below zero, and ultimately ends up firing short. So that's the four index markets that I'm looking at. Definitely slightly trickier price activity to try and trade. Today in particular, the reason why I thought it was a bit trickier is not necessarily that price didn't do what we wanted it to do. It did exactly that. We had price fall into our sign entry lines and bounce from there. The part that made it tricky was we never really got an opportunity to enter where we'd want to. So unless you're willing to increase the risk, and that too by a substantial amount, a lot of the trades today left us on the sidelines despite actually triggering the entries that we would want. We had here, for example, a breach. We had the edge signal. We never got the retest before hitting our first target. Same thing if you load in the aggressive model once we broke outside here. In that 10 to 11 a.m. hour, we can see a similar idea. Price hits our sign entry line. We have the edge signal. Again, requires you to take additional risk, assuming you wanted to take that risk, because we never actually got that pullback to our entry line. So across the board here, today price action was trickier in that you had to sit on the sidelines and be comfortable with sitting on the sidelines. And the one time we finally did get a breach that met our rules, price action just chopped around sideways, didn't hit our target before ultimately into the close, we had a series of minus 1,000 tick readings, which took us out of that trade. So I think again, across the board, tricky price action to try and trade today. We have our levels that we're looking at for tomorrow's activity. That 419.80 level on the S&P 500 is key to me. If we break below that, I think we're looking for more downward movement. If we can see buyers come in here, I think we have a shot at least having a small little bounce here, giving a chance for that market pulse to catch up, a little bit more of a systematic decline as opposed to a breakout sort of trade idea. All right, hope that helps. Good luck trading tomorrow and the rest of this week, and we'll see you in the next update.